Good afternoon, everyone, and welcome to this workshop today, or webinar, I should say, on SBA Working Capital. Thank you for joining us on this lovely South Carolina day. Hope everyone's doing well. We have a great agenda ahead of you. My name is Jim Johnson, and I am with the Small Business Development Center in South Carolina and work out of the Columbia region. I am an agribusiness food system specialist, so a lot of the work that I do is around ag and food. So excited to hear more about this SBA Working Capital Program that will be revealed to you today. We have a couple of guest speakers. One is David Leonard, who's an export finance manager with the U.S. Small Business Administration and with the Office of International Trade. So you'll be hearing from David towards the end of the program on this new working capital program. And then also we have Jeff Patterson, who's the Deputy Director of Rural Affairs for the U.S. Small Business Administration in the Office of Entrepreneurial Development. So you'll hear from Jeff shortly after I give you a presentation on the SBDC and our agribusiness services. So I'll jump right in there. And hopefully some of you have already heard of the SBDC. SBDCs are resource partners of the Small Business Administration, SBA. So we work very closely with them. And SBDCs you can find pretty much in any county in South Carolina, as we serve all counties. We offer confidential, no charge business consulting. We put on educational workshops such as we're doing today, and also we just connect folks with resources and other folks out there that can help them with their business. Our mission is basically to make South Carolina small business more successful. But out of my office in Columbia, I actually work with a lot of farms and a lot of food entrepreneurs. And we do have a specialized program. I want to review that with you. It's another slide on some of the SBDC partners. Of course, I mentioned SBA, but also the South Carolina Department of Commerce. Our network is hosted by 4 state universities: University of South Carolina, Clemson, South Carolina State University in Winthrop, and I work out of the South Carolina region, but all of our regions collaborate closely, working together just to help the client and small business. And again, SBDC, we offer confidential, no cost consulting to individual businesses, pre-ventures, folks that are thinking about getting into business, and all types of industries and services and whatnot. Help a lot with, business plans, fiscal and operational management, as well as financing and marketing. And you'll see that come across in our individualized agribusiness services as well. Some SBDC key partners in the agribusiness realm work closely with the Department of Agriculture. They have a bunch of great programs at Department of Ag at the state level, and help our clients access those resources from the Department of Ag. Work with Clemson Extension closely, Carolina Farm Stewardship Association, and the USDA in helping. I think that's a big contribution that we can make to our clients, just helping them access USDA programming, and that includes financing and grants, subsidies, and all types of other things. One of the big things is, understanding what's out there too, between both conventional lending, USDA lending, and SBA lending. Sometimes SBA makes sense over USDA funding, which you'll find out a little bit more about the SBA funding, and also makes sense over conventional funding. So that's a lot of what we do is help you see if you're ready for funding, if it makes sense, and what's the best path for your business. As far as the the agribusiness services SBDC offers. We help around financial management as well as with funding access, whether it's grants or loans. So it's interesting. We get a lot of questions about grants. It's a popular question. Most industries, there's not a whole lot of grants available to them. Agriculture is one of those unique industries where there are subsidies and grants available for specific purposes, under certain conditions. So we help folks with those, help with marketing and market access, trying to understand the market, how you reach it, whether it's direct to consumer or you're utilizing third-party markets, brokers, whatnot. Also business planning. And in business planning, comes other forms of plan, whether it's strategic planning, marketing plans, succession planning, or something very nuanced such as food safety planning. We can help with all those aspects of planning. And lastly, help a lot of folks in the new and beginning farmer realm trying to start that farm, really conceptualize where they want to go with this enterprise, whether it is a hobby or it's going to be a business, and how they can scale that business into the future and be more sustainable. So those are some of the services that we offer through the SBDC. An upcoming farm training that we have April 3rd may be of interest. It's on intellectual property, IP, in agribusiness. It's going to be at 3 o'clock on April 3rd. We have Doug Lineberry, who is an attorney that specializes in intellectual property and grew up on a farm. So he has kind of a love for farming and ag, and just wanted to share his expertise in how to use IP in the ag space, food space to protect your properties. So I will end there. And this is my name again, Jim Johnson. Can contact me here. We'll love to help you or connect you with folks that can help you. So we will now move over to Jeff Patterson, who's the Deputy Director of Rural Affairs for the SBA. Jeff, I'll let you take over.
All right. Thank you. Can everybody hear me okay? Sound good?
Yes.
Yes.
Thank you for having me. And Jim, thank you for mentioning the SBDC. I worked at the SBDC for 6.5 years here in Georgia. I happen to be stationed in Atlanta, but I do work for DC, and I'm also an old banker or retired banker anyway. So I've got a little bit of everything in the rearview mirror there, and hopefully put those skills to work here. So if you don't know, the current administration is now focusing more programming and more money, if you will, into rural markets. So there's always been a conversation about that, but now it's a higher level focus. And again, I do report up to DC, and we're talking to businesses all across the country. So what I'd want you to do, and agribusiness is a big part of what makes the economy go, right? So what I'd want you to do, your first homework assignment is, if something is getting in the way of you being successful, please reach out to me, and the team here can give you my email address. I'm not sure I put that out there, but uh, please reach out to me and let me know what the impediments are for you being successful. I've talked to a blueberry farmer. He's like, look, um, blueberries coming from Peru on a boat for 20 days, on the dock for 10 days. I show up the next day after I pick my blueberries, and they undercut my price. He said, the quality's there, but stuff like that happens every day. And chemicals, pesticides, whatever's getting in the way, let me know, because our folks are talking to other agencies in high level conversations right now to try to get things moving out of the way, whatever the right word is. So please reach out to me and let me know specific topics that would be helpful. So today, again, we're focusing on rural affairs. I want to give you some examples of other services that you may or may not know about. Some of them you may, but again, just at the risk of being redundant, I want to share those with you. The SBA on this slide, again, we've been around since 1953, and our main focus is capital access, which we're going to talk about today in detail with David, but there's also contracting assistance, counseling and education is where I'm going to spend most of my time. And then we do, if there's a disaster, and it could be the peach crop frost last year here in Georgia, qualified for disaster funding. So you want to keep that in mind. Let's go to the next slide. Also wanted you to know there's a learning platform. There are 280 on-demand videos out there on all kinds of subjects. Hopefully you can find those useful. Just know that that's out there for you. Next slide. So here's the resource partners. Let's go ahead and advance. These folks have been vetted by SBA. We've done a lot of work with these resource partners, and they're nationwide. Most of them. Some of them are branded locally, as you already know the SBDC folks. But there's over 1,400 of these offices nationwide, and they're there to help you. Whatever, wherever the rocks in the road are, they're there to help you get through that. Jim mentioned business planning, financial management, all that stuff. And I can tell you, being a commercial lender, when I knew somebody had been to see the SBDC, well, guess what? Their file went straight on top of my desk because I knew they were better prepared than the normal Joe walking off the street. So, utilize these services and take advantage of them because you look like $1 million. But let's go to the next slide. Here these are, and again, I apologize. Some of these are Georgia branded and Georgia centric because I did this presentation for some Georgia businesses yesterday, as a matter of fact, over in Statesboro. So anyway, small business development centers you know about. There are women's business centers. Now, you don't have to be a woman to take advantage of that, but I know South Carolina has a couple of those. They offer technical assistance. If you're a veteran, we have specific veteran centers out there to help those transitioning back. Some of the folks want to start their own business, so we help facilitate that. And there's procurement assistance centers all throughout the nation. Community Navigator was a program that went away, over the past 12 months. So anyway, there's the brands. If you run across those, just know there are various resources out there, again, at no cost or low cost for you to take advantage of. Next slide. SCORE has been around for a long, long time. Score.org, if you don't know them, they will do a FaceTime, they'll do a conference call, they'll do whatever to facilitate a conversation with you, and you're given a mentor, and they can help you on any subject that comes across. So know that SCORE is out there for you to use, as well as the SBDC, and you can use all these folks, right? Let's go to the next slide. Here's a great slide just to show you how impactful they are. Something like 97,000 jobs created last year and over 25,000 businesses served. So let's go to the next slide. You already know about SBDC or you wouldn't be here. Again, Jim explained that, but great. Hey, smart people, you better use them. Next slide. Here's some results from the Georgia SBDC, 4,400 clients and about 4,000 programs and training with folks attending. So the stats show that if you use SBDC, your business is going to, far exceed just the regular business that's out there that doesn't use the services. So the numbers suggest you need to tap into that. Let's go to the next slide. The women's business centers I've mentioned, we have one here in Georgia. You have two. Again, technical assistance provided, and some of it is geared to women, but a lot of it is not. So if you can tap into that, they're great people. Next slide. And some of their achievements over the past, great numbers. 13,000 clients trained. I mean, really impactful, and they're smart people as well. Next slide. The Veterans Business Centers I mentioned, again, if you're transitioning or you know of someone, they're there to help. Let's go to the next slide. And there's some of their classes and some of their numbers, at least here from the Georgia one. Let's go on the next slide. So here's why we're here really to talk about access to capital. I'm an old banker, so I want to show you this next slide and tell you again, if you don't know, it's very important to 76% of the businesses that Goldman Sachs recently surveyed said they need more money. Of course, we know that. Agribusiness is no different. You're going to need money at some point, and obviously there's a seasonality to what you do. So there are programs out there for you, but 83% of these businesses say they need better financial products. Well, we're working on that from SBA. And Jim mentioned also how good USDA folks are. We're in high level talks with USDA to do more joint programming. So hopefully that will come to pass, and you'll see some good work that we can all do together and join forces to help you. 29% of the businesses out there fail because they don't have a good access to money. And then you heard the old saying, living month to month, we laugh about that sometimes, but the numbers suggest a business only has about 27 days of cash on reserve. So you got to have that rainy day fund. And a lot of us, really need to beef that up. But those are some numbers. Let's go on to the next slide. So there is an eligibility criteria to do business with the SBA. If you didn't know that, to get a loan, obviously you need to operate for profit. We're a tax-funded agency, so that's important. And you have to be small. We are the Small Business Administration, so there are definitions around that. I'm going to show you a slide here, and just for the agribusiness piece that maybe will surprise you. But, you got to have reasonable equity invested. If you're buying a piece of equipment, you got to have a down payment just like anything else. And you really cannot be delinquent on any existing debt to the United States government. Outside of that, it's pretty well wide open. The main crux and the main call you need to make is to your lender. We're not direct lenders. You do all this through your lender, through your banker. So let's talk about one more slide on eligibility. I wanted you to see this because if you've got, if you're a soybean farmer, let's just pick that first one. If you have 2.2 million in sales, that still makes you're qualified. So to me, that's a big operation. I know eggs have been in the news lately. If you're an egg producer, you can have $19 million in sales and still qualify for an SBA loan. So the point there is there are size standards, but there's pretty big, it's not going to get in your way. Let's say it that way. But, if you're growing corn, or potatoes, you can see the numbers there. So I think there's business there for us to do together is the point. Let's go to the next slide. Jim mentioned business plans and financial plans. You need to have a plan before you go see the banker. This is just a way for me to remind you about that. You're going to demonstrate, hey, here's how I'm going to make money and how I'm going to pay you back. And there's really no one set guide or form that you need to use, but the SBDC team can help you with that progress. But I just wanted to make a point about it as well. Next slide. There are really three main buckets of money from SBA. And again, this may change a little bit when we do more with our USDA brothers and sisters, but David's going to talk about this and take off from there. But basically, when you hear the banker say, well, you really need a microloan, that's $50,000 and below. Or the two main programs are if the banker says, hey, I want to take you down the 7A SBA program, that's a key word. You can get up to $5 million through either one of these programs. But 7A is a term you'll hear from the banker on the SBA programming, and 504. 504 is strictly, mostly for real estate driven transactions or big, huge pieces of equipment. I did a 504 loan for a carpet manufacturer up in Dalton, Georgia. They literally blew the roof off and helicoptered in this big piece of equipment. So we used the 504 for that. So anyway, there's more programming out there. The reason I'm here today from the Rural Affairs perspective is let me know what's going on that's getting in your way of being successful. And number two, we're hopefully revamping programs that you need to know more about and take advantage of. So David, we'll take it from here. Thank you, SBDC team, for letting me join the party, and we will talk again.
Good morning, everyone. My name is David Leonard. I'm with the U.S. Small Business Administration, just like Jeff. And I was invited to come in and speak today to y'all about working capital. As Jeff pointed out, most small businesses don't really have a lot of working capital to go ahead and operate their business. Reserves of about 27 days. So that's really what we're talking about here, is that ability to get that operating money that you need to go ahead and operate your business and how to access that. So with that, I'm going to kind of start off and talk a little bit more about the programs. SBA doesn't do any direct loans except through our disaster program that Jeff touched on briefly. All of our business loan programs, we have partners that do that. Our microloans is what we call alternative lending. If you're a startup, if you're seeking a loan of below $50,000, and that's one of the keys, is about how much money you're seeking as direction of which program you use, and that's something that SBDC counselors can help you with. But the micro lenders are non-profits who borrow the money from the government and then relend that to help you get your business off the ground. The maximum loan is generally about $50,000, but it's a great program for those of you who haven't established business credit, looking to get your business off the ground. And the microloan can help you do that. 7A is a little bit different animal. That's where again, your bank, your credit union, sometimes non-bank lenders are making the loan. You generally want to start with your local lender, whoever you're banking with now. What happens is SBA provides a guarantee to induce them to make a loan to help you go ahead and grow your business. There's a plethora of loan programs that do here, and the bank really makes the decision about which of these will be used based again on how you're going to use the money, how you're going to pay the bank back, and then how much money you're looking to borrow. So those keys, that's why working with the Small Business Development Center is important. It's been pointed out several times already about having a business plan, having to walk in and you lay an executive summary on your banker's desk that says, again, just what I just pointed out, how much money I want to borrow, how am I going to use the money, and how am I going to pay you back, Mr. Banker? That's what really matters. And so that helps guide them into which of these programs they would use. Now, keeping in mind, there's no one bank out there that uses them all. The largest bank to the smallest bank, all of them have certain loan programs they have. They're just like any other business. So sometimes your bank or the bank that you work with may not use a program, and that's where someone like myself can help you, along with the Small Business Development Center, to refer you to maybe some other lenders where you can go ahead and get financing. Another tool that we have is called Lender Match. If you go to the SBA website, sba.gov, and click on funding, one of the links you'll see is Lender Match. Lender Match is a search engine. You upload your information you develop in terms of providing for a loan, and you can put that into Lender Match, and that matches you then with lenders whose profile you meet. In other words, here's what I'm looking to do. Here's a lender that you can talk to about applying for a loan. So you're not applying for the loan at that point. You're just being matched up with a lender. You're given an information and made a contact with them so that you can reach out to the lender and talk to them about applying for the loan. If there's not someone local, like your current lender or someone that we can refer you to, you can use Lender Match to identify lenders, and that actually looks about over a nationwide process. The key to one of the things I want to point out this morning is you see on there on the list under domestic and export. Domestic is where you're operating in all your sales of your products or services are to U.S. companies. Exporting is where your sales are to foreign buyers. We have some parallel programs in both that operate to help you go ahead and grow your business. But again, moving from that alternative lending, which is the microloan, which is a term loan, which means it's like a car loan. You get all the money up front, and you make monthly payments on it for 3 to 5 years to pay the loan back. The SBA Express and Export Express is the next product up, where you can go ahead and look at a type of either a term loan or a revolving loan. Now, most lenders out there like to do term loans. They don't like to do revolving loans. They like to do term loans because it's like permanent working capital, where you're borrowing the money to start your business or grow your business, and you can use that microloan for that. But also, then the next step up is using either the 7A small, which is a term loan, or the SBA Express or Export Express programs. The advantage of the SBA Express or Export Express is the loan can be used either as a term loan if you need permanent working capital. That's something you can talk about with the Small Business Development Center about what your need is and how you want access to the capital, or whether you need a revolving loan where the money you're going to borrow, you draw against it, similar to a credit card, and you only pay for the money that you're currently using, reducing your cost of capital. So those SBA Express loans and the Export Express loans go up to about a $500,000 maximum. That's an important stage because remember I said it's about how much money you're looking to borrow. The 7A small loan, which is a term loan, goes up to about $500,000. The next kick up is the program we're going to talk about today. And you can see it's listed both in domestic and export. The acronym is WCP, or Working Capital Pilot Program. And then finally, as Jeff pointed out, we also have our fixed asset financing under our 504 program. That's a participation loan where a lender and a certified development company in your local community puts together a loan where you get long-term fixed rate financing for buying these fixed assets. That's owner-occupied commercial real estate, or either a piece of equipment, as Jeff was pointing out in terms of the carpet manufacturer. Let me give you an example. Because I cover 6 states here in the South: Georgia, Alabama, North and South Carolina, Kentucky, and Tennessee. My primary portfolio of my loans are about agricultural products. So one of the things we helped do was for a pecan farmer who was looking to sell pecans in foreign markets to go ahead and buy a local nut processing plant, which allowed him to go ahead and expand and then start buying product from his other farmers and then exporting those products to another country. So that's one of the things, as you're looking to do that, we can help you with that, say the 504 lending program, to do that fixed asset finance. But we're right today, again, as you look at these programs, you're talking to the Small Business Development Center. The key being is you've got to have a good plan. You've got to have how you're going to pay the lender back and how you're going to use the money. But the key then again is, as you're looking at it, is based on that amount of money that you're looking to borrow and how you're going to use the money. That's what the SBDC can help you do. And then they help you determine also, is it best to borrow the money as a term loan? Is it best to borrow it as a revolving loan? And then in some cases, as Jim pointed out, there might be some programs available through USDA that you can use to go ahead and provide funds that aren't loans, but that's not available through normal business loans or business programs, and nothing through SBA except under export. And Jim is part of the group that can help you with that when you get into that process, because that's something we're going to talk about briefly again on WCP. So the WCP program is a new loan program from SBA. It's the first new program that we've introduced in over a decade. We haven't had a new program since 2012. This is a new program which allows you to go ahead and borrow working capital. This working capital can be structured as a single purpose loan or a revolving loan, for a loan up to a maximum of $5 million. The loans, what we do is we give a guarantee to a lender to induce them to make the loan. The maturity of these loans is generally set up for a maximum term of 60 months. They're usually structured, though, over a 12-month period because they're working capital. The banks look at them every 12 months and make a determination. Are you online? Do you need the capital further? Do you need to extend the loan another 12 months? And then you can go up to a maximum of 60 months, which time you can go ahead and the bank can reissue a new loan of the same product if you need to. I've got some borrowers that work with me that have had some form of a working capital loan program for more than 20 years. So that's something that's an ongoing process. Keeping in mind that everybody's looking at that generally on a 12-month basis. Most lenders that do these are non-delegated lenders. That means that they're going to internally make a decision, but they have to come to SBA and get the loan approved. There are a couple of lenders out there that do PLP loans, what's called preferred, but most of the lenders and most of all your lenders that you work with are going to be non-delegated, which means they ask SBA for a guarantee. The interest rates on these loans, you're generally looking on these loans on loans above $1 million. In some cases, some lenders will go down to $500,000. For instance, one of the banks that makes loans in your marketplace there, TD Bank, their minimum loan on this loan program is $1 million. So that's one of the keys where I was talking about those smaller loans. And based on the stage of your business and where you're at, you may get a smaller loan and then grow into this product. But the interest rate on this particular loan for loans above $350,000, that's any loan above $350,000, there's a base rate, which is usually the prime rate or what's called SOFR plus 3. And on SOFR, it's SOFR plus 3 plus 3. So it's actually SOFR plus 6. So but you've got a base rate that's done and then plus 3%. Also, lenders on these loans, when they're set up as a revolver, there's a fee usually that they're going to charge you to manage the line of credit because there is monitoring that they have to do to go ahead and provide you this particular capital. And it can be structured either as a transaction-based loan, in other words, where the lender is lending against a contract or a purchase order you may have, or it can be structured as the more traditional asset-based working capital. If your cash flow is such that you carry receivables and inventory on hand, the lender can advance against those receivables and or the inventory, both, to go ahead and provide you operating capital to operate your business. So one is transaction-based, where you're borrowing money to fulfill a specific transaction. The other is based on borrowing against current assets that you've got, receivables and inventory, that you've already sold something. You're pledging, you're not selling like a factor, you're pledging those assets, and then the lender advances against those assets for you to get operating capital to operate your business. So let's talk about this a little bit more then. So again, the particular loan list, the working capital, when you're looking at an asset-based loan, the key document is called a borrowing base certificate. If you ever get into working capital and you're looking at asset-based loans, you'll hear that term a lot. Borrowing base certificate is something you have to provide on a monthly basis, showing what eligible receivables and current inventory you have that the lender can advance against. If you sold down or been paid a receivable and your receivables go up and down, your inventory goes up and down, your line of credit and what you can be advanced, the maximum you can be advanced, goes up and down based on that level of assets. As opposed to for the companies that do not have those types of assets they can borrow against, we also allow you to borrow against either a contract or a purchase order, so you can go ahead and get the funding of the direct cost to go ahead and fulfill a project. Now, the key here being on these particular loans is you've got an advance rate. They're not going to advance you your profits. They're advancing you your, in the particular case of the borrowing base certificate, the sale of the advances against an asset. On the working capital, it's based on the direct cost. So the key being is you've got to be able to provide that borrowing base certificate monthly for the asset-based loan. For the transaction-based loan, the key is, and I was talking to a company about this yesterday, that including all your direct costs, because you want to make sure that you've got a fully realized picture of what your costs are going to be, because you need access to that capital. Until you go ahead on these loans, there's what's called self-liquidating. The payments from the loans go to the lender to pay down the loan. So your profits do not come available to you until the loan is paid down. So at that point, then you can go ahead and start drawing your profits and then apply it towards a new project or additional operating capital. but you've got to go ahead and make sure, especially on the transaction base, that those direct costs are all identified. That's the key, what Jim was talking about, and Jeff pointed out too, working with the Small Business Development Center. They can help make sure that you've got your borrowing base certificate, you've got your direct costs properly identified, and you provide that information to your lender. The lender can't make you a loan, and they cannot continue a loan if they don't have that borrowing base certificate on a regular monthly basis, and they have to have your direct costs to understand what they're funding out of the contractor purchase order, because they can't fund your profits. So again, another big opportunity for this, for any of you that may be selling to a state or federal or local government, and you have a contract, this is a great way to go ahead and get funding for that. You need working capital to fulfill those contracts. And when you're bidding on contracts, you generally have to have working capital to get surety bonded, to get bonded so that you can bid on contracts and so that you can show performance, that you can perform on a contract. You have to have working capital. So the key being is, with these loans, you can show that you've got the sufficient working capital. You can use it to show that you can get, so it allows you to get bonded so that you can actually bid on the contracts. If you have a government contract, you have to have an assignment of the contractor purchase order. But if the contract is for less than 12 months, or if you have a track record between you and the contracting authority on similar contracts, you're not required to get that assignment. You can also get, as I pointed out, post-shipment accounts receivable financing on both of these. Standby letters of credit relate to exporting, where you can go ahead, and it's similar to a performance bond. Say you've got a project, you're selling to a foreign buyer, you require a down payment. The foreign buyer wants to ensure, just like on a performance bond, that if you don't perform, they get their money back. Standby letter of credit allows you to do that. The advantage being is that you, instead of having to pledge the full amount of the bond of the letter of credit, you only have to put down 25%, making more of your capital available to you. You can also get advances under the transaction-based loan for state or federal tax rebates. Now, that's not a tax refund, that's a tax rebate. Say you're doing a project, and under that project, you're doing something that has a type of inducement that the government wants you to do, something like a solar project that you're going to get a tax rebate on. The lender can advance against those tax rebates if you have a transaction-based loan. That's where you're advancing against contracts or purchase orders. They can also advance against tax rebates. And also, some debt refinancing is available under changes of ownership under this program. So the key being is that under this particular loan, one of the big advantages for you is a lower cost of capital. In the past, if you wanted a loan, generally from SBA, you had to go ahead and you paid a lower fee for 12 months, 25 basis points, or 1/4%. There's a fee that the government charges the lender that they pass on to you to get these government guarantees. But when you went beyond 12 months, always in the past, the fees that were charged were based on term loans, not revolving loans and annual fees. This loan is now set up where the fees are structured on an annual guarantee fee, which means the lender can charge you on a 12-month basis around a little over 1/4% per year, lowering your cost of capital, because normally that fee in the second year jumps up to 375 basis points. That's 3 3/4%. That's a big difference between 1/4%. That can be thousands of dollars, especially on a larger loan. So the key being is that you can go ahead and get a maximum up to a 5-year term on any loan as you're going forward. The loans are looked at on an annual basis, so the lender has to have financial statements annually to review to make sure that you still need this level of credit. Is you have sufficient receivables and inventory to maintain it, or do you have the future contracts that you're going to be able to look at to maintain it? That's another key of working with a Small Business Development Center, because in addition to the borrowing base certificates and identifying the direct costs to get your loans advanced, you have to have those financials, just like when you're applying for the loan, every 12 months, it needs to go into the lender so they can review and make sure that this line of credit can remain in your hands, that you can use it. So let's look at what I'm talking about for just a minute. First of all, right now, under the current fiscal year that we're in now, that started October 1st, there are no fees on 7A loans. And remember, this is a 7A loan. There's no fees to the lenders for loans of $1 million or less. So that's one big advantage. If you meet $1 million or less, this particular loan right now, there's zero fees that you have to pay to the lender to go ahead and access the capital. If the loan is above $1 million, the lender, though, can charge the fee for 1, 2, 3, 4, up to a maximum of 5 years. They charge that entire fee up front, or they can renew it annually, depending on how they decide to go ahead and manage the loan. So let's look at that for just a minute. As I said a moment ago, for loans of 12 months or less, you pay 1/4%, what we call 25 basis points. That's 1/4% to go ahead and get that loan for loans above $1 million for maturity of 12 months or less. When you exceed that 12 months and you need a longer maturity, so you've got a contract, it's going to take you 18 months to do, then you would pay the fee for 24 months, because your term of your contract cannot exceed the term of the loan. Although the lender looks at it on a 12-month basis about renewing the loan in terms of paying for the guarantee so that you're looking at a proper maturity, your maturity needs to be longer than the contract that you're trying to complete or the operations that you're managing. So for the second year, if you're doing a 2-year loan, you're adding 27.5 basis points, so it jumps to 52.5 basis points. For a 3-year loan, it's 80 basis points. For a 4-year loan, it's 107.5, and for a 5-year loan, it's 135 basis points. Now that's as opposed to the 375 basis points that we charge on our term loan. So you can see the cost of capital is much lower on this loan program. Now your lender can charge the fee up front, or they can charge it when they renew the loan annually. So as I pointed out, you pay that 25 basis points for the first year for any loan over $1 million. If you want, the loan's going to be extended into the second year, you pay 27.5 basis points. As I said, just a little over 1/4% for the second year. The same is true of the third, the fourth, up until the maximum of the 5th year. At the end of the 5 years, the lender has to go ahead and reissue a new loan. If you have a particular project that's going to be longer, they can extend beyond the maximum term of the loans. They may have to reissue a loan earlier, but they can renew that loan annually up to a maximum of 3 years, making this working capital available to you either as a revolver on the asset-based loan where you're borrowing against your receivables and inventory, or as a transaction where you can bring in different transactions, bring in the contract or purchase order, make sure you've got your direct cost. You have to have that because the lender can't make a determination in what they're lending, and use that to go ahead and make you the loan. So let's look at this a little bit more. The transaction-based loans, when you're looking at these, as I said, it can support, you may have just a single transaction you want to do, but you also may have multiple transactions. You may have a main note, what we call an umbrella type note, and then subnotes under that or subcontracts under that you're funding, or you just bring in different contracts you need to go ahead and fulfill during the life of the loan that you've established with the lender. As I said, it can be set up on a non-revolving basis. You've got a single transaction where you're just fulfilling that one loan. It can be done as a revolver where you've got multiple. You're going to have other contracts, other purchase orders in the future that need to be funded. The key being is you don't have any current assets that the lender is advancing against. It allows you to borrow the money based on the direct cost of the purchase order or contract to get the financing you need. Then once you get the money, you use that to buy the inventory, you invoice the buyer, and then as the buyer pays, the payment goes directly to the lender. That's why we call these self-liquidating loans. That money is used to pay down your account You're able to continue to keep borrowing against that advance rate. So in transaction loans, that's why it's important to make sure you identify all of the direct costs so that you've got the proper money to cover you until the loan is paid off and you have access to your profits. For a lender, this allows them to extend that capital, as we've talked about. But for you, the big key here is you're allowing to get direct cost funding based on a project, and it essentially allows you to get 100% financing of that direct cost to fulfill a contract. That includes the materials, the labor, everything that's related to the project or order. So let's kind of look at this, and I just said this a moment ago, but we put this little chart up here to kind of make it more visual. You've got a purchase order from a buyer. You take that purchase order along with the direct cost that's related to that purchase order to your lender. They go ahead and look at what they can advance, and they make you an advance based on it's a one-time advance. It may be in tranches where you've got milestones you have to meet. Whatever that case may be, you take that in. They make that advance to you to go ahead and do that purchase order. Let me go back to the pecan farmer where they're going out and they're having to fill contracts where they're selling tons of pecans, generally into China. And those pecans, they're buying pecans all the way across the southern United States, all the way over actually to Mexico. And that they need that funding so they can buy the pecans to fulfill the orders that they have. So they build up their inventory. In your case, you may be building up, you may have chicken, you may have pecans, you may have whatever the case may be, but you're building up that inventory. Once you've got that product, you make shipment to the buyer, you invoice the buyer. When you invoice the buyer, that creates a receivable, which the lender is going to put a lien against the assets and that inventory, the product that you're growing, whatever you're making, or service, because it can be a product or service. When you invoice it, that creates a receivable. They're going to take a lien against that receivable. You've assigned the contract of the purchase order to the lender. So as that money comes in, it goes directly to the lender, pays down your loan so that you can then continue to access the capital until you've made all the draws against a specific purchase order or contract. And by that time, the loan should be paid off by the time you finish doing that, and your profits are coming in. So you've got your new profits, and you've got new contract or new purchase orders that you're drawing against. If you have a specific question, you can call Miguel or send him an email, and he can go ahead and answer those questions for you. Jeff can also point you in the right direction if you have a question. Jeff's email address is jeffrey.patterson@sba.gov. Jeff, I don't know if he's still on the call, but I'll type his email address real quickly here in the.
Thank you, David. We appreciate that presentation. Is exciting new product by the SBA. And again, as David referenced throughout his presentation, you can connect with your local SBDC office. There's 21 locations in South Carolina, and you can find one close to you. SBDC consultants have great relationships with a host of lenders in their markets. And then many of those lenders are SBA preferred lenders, or they work with the SBA and can help access these SBA programs. So always happy to help you connect and help you figure out your financial goals and moving forward with getting some business done. So yeah, again, thank you, David. We appreciate it. And I believe Jeff has already signed off. He had a meeting he had to get to. There's not any other questions. Again, I'll remind you, as Emily stated, you'll be receiving a survey in the mail, and please take the time to complete that survey because it helps us determine how we produce workshops and webinars in the future. And we definitely want to know if it's beneficial.
One thing I want to point out too is that I did provide a copy of a flyer on this program, specific to this program, to Beth Smith with the SBDC there. You can probably reach out to Jim and he can contact Beth or Sarah and get you a copy of the flyer if you have want to see something more on the particular program. It's also listed on our website under the programs, but please reach out to them. Again, if you have any specific questions, you either call or send Miguel an email, and he'll be happy to help you. Thank you again for your time. We appreciate it. And I want to thank again the South Carolina SBDC for providing us an opportunity to explain to y'all about the programs that are available from SBA.
Well, thank you very much. And thank you everyone for attending. And I hope everybody has a great week.